Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts,
So at this point, I think actually Steve's still here, although he doesn't have phone connection. So if you'd like me to if you'd like to ask him some questions, that'd be great. If you want to ask me some questions about options, that's great, as I traded options on the floors of 3 different exchanges for 20 years. So, I've traded through all kinds of markets. Let's see, Shanti has a question. We're going to actually, she wants me to send the presentation. This will be archived, so you can actually go and check this out tomorrow. Not only that, if you subscribe to our podcast, you'll be able to listen to it again. So that's really, really valuable. Robert wants to know, are options useful for day trading? 15 to 30 pip moves. I would say, quite frankly, no, because if you look at the bid-ask spreads, the bid-ask spreads are about 4 or 5 pips. So I don't know if you're looking at a 20-pip move, you're going to give away 4 or 5 pips each time. But for those of you that like to trade, and this is the way I like to trade, let's say 3-day, but at least a couple days, all the way out to many, many months. Options are a great way to limit your risk. So those, let's say, 8 pips that you're paying a couple pips to get in and a couple pips to get out, let's say 4 or 5 each side, really makes sense as you're limiting your risk. So whether you're trading call spreads, put spreads, you're hedging, it's a wonderful way for you to decide as the investor that there's another vehicle out there. So it's not just the FX spot market. In fact, what's great about the ISE is that you're not trading with the exchange, and the markets are transparent. In fact, if you don't have an account, I'd urge you to go to a site called LiveVol, L-I-V-E, Vol, VOL.com, and you could type in those 6 symbols. So you can type them in, and you could see the markets, you can see what's going on, the volume, you can see everything. And that's just, to me, it's so transparent. It's a breath of fresh air from what you're used to. And like I say, intermediate to long-term strategies for options. If you're trying to hedge a 1 or 2 day thing, great. Maybe it's something that you're expecting a huge move. I've seen FX traders doing that, but not as a daily way to just try to make a couple pips. Probably not. You're probably better off in the spot market. Okay, a couple more questions. If you're interested in anything, what does the volatility mean? Which month is best to buy? Which strike price? Obviously, there isn't any best, but I can actually give you some clues. I'll take 1 or 2 more questions. Let's see. Question is that the volatilities, what do the volatilities really mean? What do the volatilities mean? Well, the volatilities are just giving you a snapshot, or basically it's a market poll of what the market's expecting as far as volatility. So, you can't really read too much into, let's say, the highest volatility at the ISE right now in the FX market would be dollar Australian dollar. So some would say, that means that the people are very bearish on the U.S. dollar relative to the Australian dollar. Others would say, no, people are really bullish on the U.S. dollar relative to the Australian dollar. It's as weird as it sounds, it's actually both. The idea is that volatility is what the market's expecting. So we don't know if that's really going to hold true. Dollar, Australian dollar, at least the way we're quoted late this evening, AUX about 19.6 vol. So that's a tremendous move. If we look at it, saying that the dollar Australian dollar should move about 20% in a year. So let's just say it's trading 120. So that's basically a 12-point move. That's actually a 24-point move either direction. So that's, if you look at a 24-point move, that's quite a bit. So that's, you're looking at some huge shift of 20% in either way, 20% of 120, 24 points up or down. That's a lot. So, we could get down below parity, or we can go all the way up to 140-ish. So is liquidity an issue? I think you'll see if you go to livevol.com that liquidity is not an issue, that we're trading thousands of contracts. Open interest is growing. And as I said, the normal bid-ask spread, we have one of the largest and best market makers in the world quoting these options with the help of some others. And you'll be able to get in and out of these trades pretty easily. So I think that you'll find that this may be for many of you, as the liquidity is not a factor. But again, please, at least check it out. Yes, question is, what is that what's that site? I'm going to type it in, www.livevol.com. So live vol, V-O-L, and you'll be able to check out the markets. Check out the markets during the trading day, because after the close, sometimes the markets are actually, they're widened out, so they're not the real markets, but you can check it out. Can you hedge? Question is, can you hedge currency future contracts, currency options? Yes. I like to think that you can do a lot of different things. This is a great product for the spot trader. You can do this for someone that's trading futures, but you may want to look at some other contract that has that perfect correlation with it. We think that our product is great for the spot trader. Of course, someone that's trading futures could actually hedge using it also. That's not a problem. But again, you just want to make sure that you're doing your math correctly, as our products are all dollar relative. So it's buying calls if you think the dollar is going to go up, and buying puts if you think the U.S. dollar is going to go down. At this point, I want to thank Steve Meizinger, even though Steve's not here, because again, he's had a phone problem. I'm not sure what happened. Maybe I guess the WebEx platform, some sort of problem here. So I want to again just say he wants to apologize. And again, he's been with us a couple times before, and something wasn't right. So let's just, well, I hope to have him back very, very soon. In fact, maybe we'll try to reschedule, or, we'll just update his numbers. And Dawn, thank you for saying great classes. I actually, of course, had to be a little bit spontaneous here, and, just sort of giving the information out, Steve's information. And since I was a floor trader for many years, I was able to sort of tweak it, or just, be able to present it even though it's not my material. This is Steve Meizinger's material from OTA, and Steve saying thanks also. Nice job. Again, Steve will give you the ability to, basically to learn. So you can learn a lot about the FX market. You can learn a lot about options. And again, let me go back. Let's see if we can go all the way to the beginning. And I'll just show that one more time. The different sites. There you are. You can actually email Steve Meizinger, smeizinger at tradingacademy.com or www.tradingacademy.com. So thank you very, very much. I appreciate you all hanging in with us today. And again, this will be available via podcast, archive, and Steve will be back with us. So again, I look forward to bringing Steve back live on the behalf of the International Securities Exchange. This is your host, Steve Meizinger, saying have a pleasant evening. And remember, just be careful in these markets. Markets are really quite volatile, and you just want to make sure that you understand the risks of all the trades that you get into. Thanks so much. Good night, everyone.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.